Yesterday, the euro rallied, driven by rather upbeat data on GDP growth and inflation from France and Italy. The European currency was also supported by statistics on eurozone inflation. Consumer prices unexpectedly grew by just 2.9% year-on-year in October, the slowest pace since July 2021 from 4.3% a month earlier. Core inflation dropped to 4.2%, matching economists' forecasts. Given the pace of inflation easing and high energy prices, the European Central Bank will most likely stay in wait-and-see mode. After all, the region's economic growth was weaker than expected in the third quarter. GDP in the 20 countries sharing the euro fell by 0.1%, while economists expected a 0% quarterly gain. On a year-over-year basis, data showed a 0.1% rise. Against this background, the euro came under pressure. The sell-off deepened after the US reported data on consumer confidence. The conference board said its consumer confidence index declined moderately to 102.6 in October from 104.3 in September, compared to analyst consensus of 100. Speaking of the British pound, the situation was the same. Sterling gained strong upside momentum in early trade, but then went back down in the North American session. Although the uptrend remains intact, the currency will hardly be able to rise above this week's high. Thus, downward pressure will only intensify. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It's bereft of any important news releases from the euro area, but includes some crucial reports from Britain. Traders may take notice of the UK manufacturing PMI, which is estimated to have stayed below the 50-point mark at 45.2 in October, still signaling output contraction. The focus of market participants will be on US statistics. The ADP National Employment Report is likely to show a gain of 150,000 jobs compared to 98,000 rise in September. Business activity in the US manufacturing sector is forecast to remain unchanged, with the ISM manufacturing PMI arriving at 49.0. If the reading tops market expectations, the dollar will extend gains. And most importantly, all eyes will be on the meeting of the US Federal Reserve. Fed officials are widely expected to leave interest rates steady at 5.5%. Thus, investors will monitor the regulator's post-meeting statement and Fed Chair Jerome Powell's comments at a news conference for clues about the future of monetary policy. At the same time, the central bank is likely to leave the door open for another rate hike in December and express the need to assess that to make further policy decisions. In this case, the greenback will probably continue its bullish run against the euro and the British pound. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, a false breakout at 1.0580 will generate a sell signal, thus bringing the price down to 1.0549. If bulls regain control of the market, forming a false breakout at this level, the euro will most likely bounce back to 1.0580. If the price breaks below 1.0549, the euro is expected to extend weakness to 1.0525. At this level, I recommend going long on a rebound to catch an intraday correction of 25 pips. At the same time, a deeper slide to 1.0497 and 1.0474 cannot be ruled out. However, this scenario is possible after the Fed's meeting. Alternatively, if the price overcomes 1.0580 and consolidates above this level, the European currency will have a chance of rising to 1.0604. At this mark, it would be a wise decision to go short amid a false breakout, counting on a resumed downward move. Short positions on a rebound can be considered at 1.0633 or 1.0661 before the Fed announces its policy decision. As for the pound sterling, long positions can be opened amid a false breakout at 1.2120 or 1.2091. Going long on the rebound will be relevant at a 1-month low of 1.2065 with a view to catching an intraday correction of 25-30 pips. Short positions can be considered amid a false breakout at 1.2161 or after the price fixes below 1.2120. Alternatively, traders may go short at 1.2197 or 1.2230. However, a rise to this area is possible only if the US central bank signals the end of its tightening cycle. In this case, the British pound will extend gains on a weaker dollar, heading for 1.2230 and even 1.2258. At these levels, one can earn on a bearish corrective moves of 20-25 pips. Best of luck.